The world watched as news broke of escalating tensions between India and Pakistan. Amidst the headlines of military maneuvers and diplomatic standoffs, a quieter story was unfolding in the financial markets. Dassault Aviation, the French aerospace giant behind the Rafale fighter jet, saw its stock price take an unexpected plunge. A 7% drop raised eyebrows and set analysts scrambling for answers. The ceasefire, while a relief to many, seemed to have triggered a wave of investor anxiety. What was going on? This wasn't just another day on the trading floor. Dassault's stock dip was directly linked to the geopolitical drama playing out between the two nuclear-armed neighbors. Operation Sindoor, India's strategic deployment of its Rafale jets, had become a focal point. The operation, shrouded in military secrecy, was designed to send a clear message to Pakistan. The response from Islamabad, however, added another layer of complexity to the situation. The ceasefire, intended to de-escalate the conflict, inadvertently fueled a different kind of firestorm, one that played out on stock tickers and in boardrooms. This essay delves into the factors behind Dassault's stock slide, examining the interplay of geopolitics, market sentiment, and the future of military aviation. The week leading up to the ceasefire was a turbulent one for Dassault Aviation. The company, known for its high-performance aircraft and defense contracts, found itself caught in the crosshairs of the India-Pakistan conflict. As tensions flared, Dassault's stock price became a barometer of investor sentiment, and that sentiment was increasingly uneasy. Initial market reactions were mixed. Some investors betting on increased defense spending in the region saw the conflict as a potential boon for arms manufacturers like Dassault. The logic was simple. Heightened tensions often translate into a surge in military procurement. However, this bullish outlook was tempered by a growing sense of caution. The uncertainty surrounding the situation, coupled with the potential for a wider conflict, made many investors wary. The specter of a drawn-out confrontation between India and Pakistan, both possessing nuclear arsenals, was a risk scenario that few were willing to discount. This led to volatility in Dassault stock, with the price swinging as news updates and official statements painted an ever-changing picture of the crisis. At the heart of the market turbulence was Operation Sindoor, India's calculated deployment of its recently acquired Rafale fighter jets. The operation, while never officially acknowledged by New Delhi, was widely seen as a show of force intended to deter any aggressive moves by Pakistan. The Rafale, with its advanced capabilities and long-range strike potential, was a potent symbol of India's military modernization efforts. By showcasing the Rafale's capabilities, India aimed at sending a clear message. Any attempt to escalate the conflict would be met with a swift and decisive response. The operation was carefully calibrated to demonstrate resolve without being overtly provocative. The choice of the Rafale, a platform specifically designed for air superiority and deep strike missions, was no accident. India's strategic use of the Rafale was not lost on Pakistan, which closely monitored the operation's movements and capabilities. The deployment served as a stark reminder of the shifting balance of power in the region and the technological edge that India had gained with the acquisition of the French-made jets. This, in turn, fueled Pakistan's response, which took the form of counterclaims and an information campaign aimed at downplaying the significance of Operation Sindoor. Pakistan, caught off guard by the scale and audacity of Operation Sindoor, was quick to respond. Unable to match India's display of air power on a technical level, Islamabad resorted to a two-pronged strategy: counterclaims of their own military preparedness and an information campaign designed to sow doubt and uncertainty. Pakistani officials vehemently denied any claims of being intimidated by India's deployment of the Rafale. They asserted that their own air defense systems and fighter squadrons were more than capable of countering any threat. These pronouncements, however, were often light on specifics and heavy on nationalistic rhetoric. The aim was to project an image of strength and deterrence, even if the reality on the ground was more nuanced. In tandem with these public pronouncements, Pakistan launched an information campaign aimed at discrediting Operation Sindoor and undermining India's narrative. State-controlled media outlets circulated reports questioning the Rafale's capabilities, highlighting supposed technical glitches, and even alleging that India was exaggerating the scope and success of the operation. The goal was to muddy the waters, creating confusion and casting doubt on the effectiveness of India's show of force. Section 5. Ceasefire triggers panic, why investors hit the sell button. The ceasefire, while welcomed by many as a sign of de-escalation, paradoxically triggered a wave of panic selling among Dassault's investors. The 7% stock plunge, seemingly counterintuitive, can be attributed to a confluence of factors, ranging from short-term market reactions to the spread of misinformation. One immediate driver was profit-taking. Investors who had bought Dassault stock in anticipation of a protracted conflict saw the ceasefire as an opportunity to cash in on their gains. The logic was straightforward. With the immediate threat of war receding, the likelihood of a surge in Indian defense spending diminished. This triggered a sell-off as traders sought to lock in profits before the perceived window of opportunity closed. Adding to the downward pressure was the spread of misinformation and speculative reporting. Pakistan's information campaign, though largely dismissed by military analysts, had a tangible impact on market sentiment. Rumors of technical problems with the Rafale, coupled with exaggerated claims about Pakistan's air defense capabilities, created enough uncertainty to spook some investors. Section 6. Beyond the headlines, the reality of Dassault's financials. Despite the market's knee-jerk reaction, the reality of Dassault's financial health was far less precarious. The company, a stalwart of the European aerospace industry, boasted a robust order book and a solid track record of profitability. The 7% stock dip, while attention-grabbing, needed to be viewed within the broader context of Dassault's business fundamentals. Dassault's order book, a key indicator of future revenue streams, remained healthy. The company had secured lucrative contracts for its Rafale fighter jet from several countries, including India, Egypt, and Qatar. These long-term agreements provided a degree of insulation against the vagaries of short-term geopolitical events. Even if India's defense spending were to slow down, Dassault had a diversified customer base to rely on. Furthermore, Dassault had a proven track record of profitability. The company had consistently generated strong earnings, driven by its sales of military aircraft, business jets, and defense systems. This financial stability, combined with a healthy order book, suggested that Dassault was well positioned to weather the storm of market volatility. Section 7. The China factor looming competition for Dassault. While the India-Pakistan situation presented immediate challenges, Dassault also faced long-term competitive pressures, most notably from the rise of China's indigenous defense industry. Chinese firms backed by substantial state support were rapidly developing advanced fighter jets and seeking to expand their global market share. This presented a potential threat to Dassault's future growth prospects, particularly in price-sensitive markets. China's emergence as a major player in the global arms trade was reshaping the competitive landscape. Chinese companies, often able to offer their products at lower prices due to government subsidies and lower labor costs, were attracting attention from potential customers in Asia, Africa, and Latin America. This price competition put pressure on traditional Western defense contractors like Dassault to innovate and find ways to remain cost-competitive. Moreover, China was making strides in advanced technologies, such as stealth and electronic warfare. The Chengdu J-20, China's fifth-generation stealth fighter, represented a significant leap forward in Chinese aerospace capabilities. This technological progress had the potential to erode Dassault's technological edge in the long run, making it imperative for the French company to invest heavily in research and development to maintain its competitive advantage. Can Dassault's stock recover? Investors wondered if Dassault's stock could recover from its 7% dip. The answer was uncertain, but several factors suggested a rebound. Dassault had strong business fundamentals and a healthy order book. The company's reputation and diversified customer base provided resilience. Dassault's commitment to innovation and R&D boded well for future prospects. Strategic investments in UAVs and next-gen fighter tech were crucial for growth. Section 9. Investor takeaways balancing risk and opportunity with Dassault. Dassault's stock fluctuations offer valuable lessons for investors in defense stocks. Key takeaways include looking beyond short-term market noise, understanding business fundamentals, and assessing geopolitical risks. Investing in defense companies carries geopolitical risk. Conflicts and shifts in government spending can impact a company's bottom line. Investors must be comfortable with volatility and avoid rash decisions based on headlines. Conducting thorough due diligence on financials and competitive positioning is crucial. understanding a business's strength provides a more informed basis for investment decisions. In Dassault's case, despite a 7% stock dip, deeper analysis reveals strong fundamentals and a solid track record. Dassault's commitment to innovation and financial stability suggests long-term value for investors.